Good evening everyone and welcome to this awareness program which is conducted by Bengaluru branch along with the Income Tax Department of Bengaluru. This session is going to focus on the disclosure of foreign assets in the income tax returns as well as reporting of the foreign income in the tax returns. So it's a pleasure to welcome you all, a warm welcome to each one of you and to the dignitaries and various officers from the Income Tax Department. I request our Vice Chairman Manjunath Hallu to escort the Chief Guest Dr. Narendra Kumar IRS Director General of Income Tax to the dais and greet him with the floor. We have Shri V. Palannimelu Rajan, IRS Principal Director of Income Tax. I request Rejo, our MC member, to escort him to the dais. We also have Shri Chetan R, IRS Additional Director of Income Tax Investigations. Sir, I request you to come out to the dais. And Mrs. Shamala, Joint Director of Foreign Asset Investigation Unit. And Mrs. Rehana R, Deputy Director of Income Tax Foreign Asset Investigation Unit. I request C. Navin Kariwal to come out to the dais. It's a pleasure having you all here. Thank you so much for honoring our request and being here. Before we proceed with the inauguration, I'll just quickly introduce the guest of honor and the chief guest of the day. The chief guest for this event is Dr. Narendra Kumar IRS. He is a director currently serving as Director General of Income Tax Investigation Karnataka and Goa. He is from the 1990 batch of IRS. He has started his career as ACIT in Amritsar and subsequently went on to work as an ADIT in Hisar and served in various capacities in Gujarat and Delhi. He has also served as CAT Appeals International Taxation in Mumbai and he is now the Director General of Income Tax Investigation for the region of Karnataka and Goa. Sir, it's a pleasure and honor to have you here. Thank you so much for being here. Warm welcome to you. The guest of honor, Shri Palannimelu Rajan. He started his career as ACIT in Madurai and subsequently worked as an ADIT also in Madurai. He worked as a Joint Director and Additional Director of Investigation Unit 2 in Bengaluru for a record time of 5 years and 2 months from July 2007 to 31st August 2012. He has been instrumental in conducting various search across various sectors in Bengaluru and is now serving as the Principal Director of Investigation Wing Bangalore. So thank you for being here. A warm welcome to you all. Shri Chetan, who is with us, is an Additional Director of Income Tax Investigation heading the Unit 2. So thank you for being here. A warm welcome to you. We have Srimati Shamala DD, Joint Director of Investigation Foreign Asset Investigation. Madam, thank you for being here. Thank you. And Mrs. Rehana R, IRS Deputy Director of Income Tax. Madam, a warm welcome and thank you for being here. We'll now have we inaugurate the event by lighting the lamp. I request all the dignitaries to come into the front of the dais. And also my MC members to come out to the dais. So please come. Ma'am. play the motto song, please raise.
Yesha Sutteshu Jagrati Yesha Sutteshu Jagrati Kamam 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 Kamarusho Purusho Nirvimana Nirvimana Tadeva Shukram Tadeva Shukram Brahma
Thank you. Please be seated. Now request our Chief Guest Dr. Narendra Kumar IRS to address the gathering. So over to you.
Thank you very for some kind words for me. Good evening friends, Namaskara. I convey my sincere thanks from core of my heart for giving me this opportunity and for jointly organizing this program, awareness program on filing foreign assets and income tax reporting. Definitely it is a matter of privilege for me to be here and to interact with all of you. As you all are aware, policy of the government is to collect the correct taxes, not a penny less, not a penny more than what is due. And for collecting the correct taxes, your role is most important. The taxpayers, your interaction is more close and more wider than the department with the taxpayers. The role of the chartered accountant in educating the taxpayer for achieving the goal of the government for correct collection of tax is most important. There is no doubt about it. I am honestly accepting it. Because they disclose all accounts before you, they trust you, and they also follow your advices. There are many times some bona fide mistakes for which hardship is more, compliance cost is more. One of the aspects is now this disclosure of the foreign assets. Bangalore is hub of the technology, software industry, and many of the professionals, they are temporarily deputed from their principal place of business, that is Bangalore, to some other foreign projects. And for particular 1 or 2 years, they may get a status of non-resident while filing their return of income. And after 1 or 2 years, they will again come back. Their status will be resident. Now they must have acquired some assets during that period of non-resident during in the foreign countries, or some ESOPs. Bona fidely or due to lack of knowledge, they don't disclose it. Now, after introduction of this Benami Transaction Act, Black Money Act 2015, hardship cost is very high for such negligences. Therefore, organizing such seminar and educating the taxpayer is extremely important. And for this initiative of organizing this seminar, I convey my sincere thanks to the Institute. I request and I solicit your cooperation in educating taxpayers. Here with the institute we are organizing this program. Further we can also organizing such type of programs with some of the employers who are providing employment to large number of people, and they are deputing such employees to some foreign assignments for some specific periods. So that we can also do again with close cooperation with each other. So I once again convey my sincere thanks for giving me this opportunity and for jointly organizing this program. Thanks a lot. And now we have a presentation. First we will go through that presentation. After that we can do some question answers also. But my request is today please restrict those question answers only to the related topics. Other we can take on some other day. Thank you very much.
Thank you, sir. And definitely we are with you in terms of making sure that there is a right collection of tax and disclosures. We'll help whatever we can do from our side. I now request guest of honor Shri Palanivel Rajan sir to address the gathering. So please, 2 minutes.
Good evening, friends. The tone has been set by the DG and all our office bearers of the Bangalore chapter. So I once again reiterate the same appeal. You are our ambassadors, like we are stakeholders of the department. The government also, as you know, has been taking a lot of reformative steps to recriminalize and to decriminalize various laws and to promote voluntary compliance in the direct taxation front. That all of you are aware, and that is yielding rich dividends, whether in terms of the increased number of returns or the revenue buoyancy. So in this regard, why to leave on this particular issue of just reporting compliance, right? As DG was mentioning, there is an information asymmetry, right? It's not out of default or the intention that somebody has not filled the schedule or has not offered the asset or income because of the capital, the capital movement, labor movement is also so huge, and being Bangalore being the technological hub, the number of people who go abroad for assignments and who come, and due to their busy schedule, this schedule probably didn't get the attention that it deserved. So we'll request you to take this opportunity to sensitize your clients to make up if there are any gaps. Overall, roughly we have some number crunching, and bulk of the people who probably have not complied with this official reside in our region for the simple reason that ours is a technological hub. So that's why, no other reason. Catchment area is more, number of people who went on assignment overseas is more, so that's why even the so-called non-reporting has slightly been accentuated, but then it's a good opportunity and time is there. If there are any gaps, they can find the revised return, they can update. Yes, we have taken a lot of steps. Even the recent amendment also, the threshold has been increased to 20 lakhs, as you know, and we are ready. In fact, we already started engaging with some of the top employers, right? Personally on a one-on-one level also, right? So we are ready even for any webinar, online webinar, or my team can be present in their town hall meetings. We can sensitize. We don't want to pick and choose this particular person that you have not done this thing, you are failed to do. No, we don't want any kind of this thing. They know, we have already sent a substantial number of SMSs and emails in a centralized manner to the respective taxpayers. Right? We acknowledge their contribution to the nation. At the same time, if small this glitch, if it is ironed out, it will bring peace of mind in their minds, and we can work together. We can walk forward also. So I, once again, on behalf of the department as well as on behalf of, especially on behalf of the Director of Investigation, beseech all of you to help us in this mission. Thank you so much.
Thank you, sir. And now I request C. Naveen Kari will to set the context before the presentation, before we hand over to the department officials for the presentation.
Thank you. I will not stand between you and the officials. Just 2 minutes. So to just set the ball rolling now, it's most apt time when all the dignitaries on the stage, you know, when they wanted to make a presentation on foreign assets, they immediately agreed to the request of our chairman and secretary, and they were kind enough, and immediately they have agreed to address the chartered accountants. So a lot of questions are there in our mind, I know, like this scheduled FA, it's applicable to whom? Like who should fill up, whether resident or not ordinary resident, or resident but not ordinary resident, or resident and ordinary resident. Example, what is calendar year? Should I fill up for 12 months?
Branch along with the Income Tax Department of Bengaluru. This session is going to focus on the disclosure of foreign assets in the income tax returns as well as reporting of the income, foreign income in the tax returns. So it's a pleasure to welcome you all, a warm welcome to each one of you and to the dignitaries and various officers from the Income Tax Department. I request our Vice Chairman Manjunath Hallu to escort the Chief Guest Dr. Narendra Kumar IRS Director General of Income Tax to the dais and greet him with the floor. We have Shri V. Palannimelu Rajan, IRS Principal Director of Income Tax. I request Rejo, our MC member, to escort him to the dais. We also have Shri Chetan R, IRS Additional Director of Income Tax Investigations. Sir, I request you to come out to the dais. And Mrs. Shamala, Joint Director of Foreign Asset Investigation Unit. And Mrs. Rehana R, Deputy Director of Income Tax Foreign Asset Investigation Unit. I request C. Navin Kariwal to come out to the dais. It's a pleasure having you all here. Thank you so much for honoring our request and being here. Before we proceed with the inauguration, I'll just quickly introduce the guest of honor and the chief guest of the day. The chief guest for this event is Dr. Narendra Kumar IRS. He is a director currently serving as Director General of Income Tax Investigation, Karnataka and Goa. He is from the 1990 batch of IRS. He has started his career as ACIT in Amritsar and subsequently went on to work as an ADIT in Hisar and served in various capacities in Gujarat and Delhi. He has also served as CAT Appeals International Taxation in Mumbai, and he is now the Director General of Income Tax Investigation for the region of Karnataka and Goa. Sir, it's a pleasure and honor to have you here. Thank you so much for being here. Warm welcome to you. The guest of honor, Shri Palannimelu Rajan. He started his career as ACIT in Madurai and subsequently worked as an ADIT also in Madurai. He worked as a Joint Director and Additional Director of Investigation Unit 2 in Bengaluru for a record time of 5 years and 2 months from July 2007 to 31st August 2012. He has been instrumental in conducting various search across various sectors in Bengaluru and is now serving as the Principal Director of Investigation in Bangalore. So thank you for being here. A warm welcome to you all. Shri Chetan, who is with us, is an Additional Director of Income Tax Investigation heading the Unit 2. So thank you for being here. A warm welcome to you. We have Srimati Shamala DD, Joint Director of Investigation, Foreign Asset Investigation. Madam, thank you for being here. Thank you. And Mrs. Rehana R, IRS Deputy Director of Income Tax. Madam, a warm welcome and thank you for being here. We'll now have we inaugurate the event by lighting the lamp. I request all the dignitaries to come into the front of the dais. And also my MC members to come out to the dais. Please come. Ma'am. We'll now play the motto song. Please raise.
येष सुप्तेषु जाग्रति येष सुप्तेषु जाग्रति कामं 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 कामरुषो पुरुषो निर्विमानः निर्विमानः तदेव शुक्रं तद्ब्रह्मा तदेवामृतमुच्यते अस्मिन् लोकः शितः सर्वे तनूनात्यतीतश्च नान्यतीतश्च एतद्वैता 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 एतद्वैता.
Thank you. Please be seated. Now request our chief guest, Dr. Narendra Kumar IRS, to address the gathering. So over to you.
Thank you, Madam, for some kind words for me. Good evening, friends. Namaskara. I convey my sincere thanks from core of my heart for giving me this opportunity and for jointly organizing this program, awareness program on filing foreign assets and income tax reporting. Definitely it is a matter of privilege for me to be here and to interact with all of you. As you all are aware, policy of the government is to collect the correct taxes, not a penny less, not a penny more than what is due. And for collecting the correct taxes, your role is most important. The taxpayers, your interaction is more close and more wider than the department with the taxpayers. The role of the chartered accountant in educating the taxpayer for achieving the goal of the government for correct collection of tax is most important. There is no doubt about it. I am honestly accepting it. Because they disclose all accounts before you, they trust you, and they also follow your advices. There are many times some bona fide mistakes for which hardship is more, compliance cost is more. One of the aspects is now this disclosure of the foreign assets. Bangalore is hub of the technology, software industry, and many of the professionals, they are temporarily deputed from their principal place of business, that is Bangalore, to some other foreign projects. And for particular 1 or 2 years, they may get a status of non-resident while filing their return of income. And after 1 or 2 years, they will again come back. Their status will be resident. Now they must have acquired some assets during that period of non-resident, during in foreign countries, or some ESOPs. Bona fidely or due to lack of knowledge, they don't disclose it. Now, after introduction of this Benami Transaction Act, Black Money Act 2015, hardship cost is very high for such negligences. Therefore, organizing such seminar and educating the taxpayer is extremely important. And for this initiative of organizing this seminar, I convey my sincere thanks to the Institute. I request and I solicit your cooperation in educating taxpayers. Here with the Institute we are organizing this program. Further we can also organizing such type of programs with some of the employers who are providing employment to large number of people, and they are deputing such employees to some foreign assignments for some specific periods. So that we can also do again with close cooperation with each other. So I once again convey my sincere thanks for giving me this opportunity and for jointly organizing this program. Thanks a lot. And now we have a presentation. First we will go through that presentation. After that we can do some question answers also. But my request is today please restrict those question answers only to the related topics. Other we can take on some other day. Thank you very much.
Thank you, sir. And definitely we are with you in terms of making sure that there is a right collection of tax and disclosures. We'll help whatever we can do from our side. I now request guest of honor Shri Palanivel Rajan sir to address the gathering. So please, 2 minutes.
Good evening, friends. The tone has been set by the DG and all our office bearers of the Bangalore chapter. So I once again reiterate the same appeal. You are our ambassadors, like we are stakeholders of the department. The government also, as you know, has been taking a lot of reformative steps to recriminalize and to decriminalize various laws and to promote voluntary compliance in the direct taxation front. That all of you are aware, and that is yielding rich dividends, whether in terms of the increased number of returns or the revenue buoyancy. So in this regard, why to leave on this particular issue of just reporting compliance, right? As DG was mentioning, there is an information asymmetry, right? It's not out of default or the intention that somebody has not filled the schedule or has not offered the asset or income because of the capital, the capital movement, labor movement is also so huge, and being Bangalore being the technological hub, the number of people who go abroad for assignments and who come, and due to their busy schedule, this schedule probably didn't get the attention that it deserved. So we'll request you to take this opportunity to sensitize your clients to make up if there are any gaps. Overall, roughly we have some number crunching, and bulk of the people who probably have not complied with this official reside in our region for the simple reason that ours is a technological hub. So that's why, no other reason. Catchment area is more, number of people who went on assignment overseas is more, so that's why even the so-called non-reporting has slightly been accentuated, but then it's a good opportunity and time is there. If there are any gaps, they can find the revised return, they can update. Yes, we have taken a lot of steps. Even the recent amendment also, the threshold has been increased to 20 lakhs, as you know, and we are ready. In fact, we already started engaging with some of the top employers, right? Personally on a one-on-one level also, right? So we are ready even for any webinar, online webinar, or my team can be present in their town hall meetings. We can sensitize. We don't want to pick and choose this particular person that you have not done this thing, you have failed to do. No, we don't want any kind of this thing. They know, we have already sent a substantial number of SMSs and emails in a centralized manner to the respective taxpayers. Right? We acknowledge their contribution to the nation. At the same time, if small this glitch, if it is ironed out, it will bring peace of mind in their minds, and we can work together. We can walk forward also. So I, once again, on behalf of the department as well as on behalf of, especially on behalf of the Director of Investigation, beseech all of you to help us in this mission. Thank you so much.
Thank you, sir. And now I request C.A. Naveen Kariwal to set the context before the presentation, before we hand over to the department officials for the presentation.
Thank you. I will not stand between you and the officials. Just 2 minutes. So to just set the ball rolling now, it's most apt time when all the dignitaries on the stage, when they wanted to make a presentation on foreign assets, they immediately agreed to the request of our chairman and secretary, and they were kind enough, and immediately they have agreed to address the chartered accountants. So a lot of questions are there in our mind, I know, like this scheduled FA, it's applicable to whom? Like who should fill up, whether resident or not ordinary resident, or resident but not ordinary resident, or resident and ordinary resident. Example, what is calendar year? Should I fill up for 12 months? What is peak value? Whether it is peak value of cost or whether it is peak value of investments. So a lot of thought processes are there. Then A1 is there, as you know, something called as custodial account. Then comes, various A1, A2, A3, A4, depository account. Then various other assets like, trust incorporated outside of India, or financial interest, beneficial owner, beneficiary. So many things are there. So if you see my chairman also, the outline I just saw, Jnana Pravartanam, navigating journey with the right kinds of knowledge. So we are going to now navigate next 1 hour before, Madam Reena and Madam Shamla with the knowledge of foreign assets. And mind you, before my closing remarks would be, February 24, there was an important amendment, which all of you would have overlooked, but not now. The important amendment suggestion was given by none other than our PBR sir, which the central government finance minister accepted. They increased that penalty, very important, section 41, 42, 43. Today the penalty is 20 lakhs. The limit is increased for any other asset other than immovable property, courtesy one of the finance officers of the department. So these are my closing remarks, and over to you, madam.
Thank you, sir. And now it's time to hear from the horse's mouth. They'll clarify all our questions, whatever Naveen sir mentioned. Over to you, Naveen.
Dignitaries, Sri Narendra Kumar sir, DGIT, Principal Director of Income Tax, Sri Pranil Rajan sir, my senior officers, all the respective members of the ICA fraternity who have gathered here. A very good evening to all of you. As sir have discussed, so you all might be aware that CBDT has recently launched the Compliance Cum Awareness Program for assessment year 2024-25 to assist the taxpayers to file details about their foreign assets and the foreign income. So this outreach program is a humble effort from our end to reach out to you as well as through you to the taxpayers to create awareness about the Schedule FA, FSI and the importance of disclosing the foreign asset as well as the foreign income. And thus highlighting the Income Tax Department's commitment to foster a culture of transparency, accountability and voluntary compliance. Recently, usually we get a lot of data related to CRS, FATCA and about the foreign assets which are being held by many of the taxpayers abroad. And when we discuss with them, one common response that we get is that they are not aware of the provisions, or they are not aware that they have to file Schedule FA, and they are not even aware that Black Money Act, the provisions of the Black Money Act get if involved. So that is why we have thought to reach out to you. So if we'll just see the important provision with respect to the foreign asset and why we have to report to the government. So who must report foreign assets? So all the residents of India have to report the foreign assets. And when it comes to individuals or HUFs, it is the ordinary residents who have to report their, declare their foreign assets in their ITR. Foreign assets as well as the foreign income in their ITR. Also, any NRIs and non-ordinary residents who was ordinary resident in India in the previous year to which the foreign income relates, or in the previous year in which the foreign asset was acquired. In fact, this has come as an amendment in 2019 and with effect from 1/7/2015. So this was introduced, you can refer to section 2 of the BMA Act, where they included this NRI and RNOR who was ordinarily resident at that time in the BMA Act. And this reporting requirement is needed if you have any of the following. Like for example, if you are having any financial assets or any financial interest abroad. For this may include any bank accounts, stocks, properties, any financial interest, anything which is held outside India. Or if you are a signing authority. So that means if you are, for individuals who are signing authority on foreign accounts, they also must report it is a foreign asset. In fact, Section 139 of the Income Tax Act 1961, the fourth proviso mentions that the signing authority as well as the beneficiaries and the beneficial owners of the foreign asset must also report their foreign assets as well as a foreign income. So that means if you are a beneficial owner, its income must be reported even if you are not the legal owner of that asset. So for knowing what is the difference between beneficiaries and beneficial owner, it is given in explanation 4 and explanation 5 of the section 139 of the Act. So what is a beneficial owner? Who is a beneficial owner and who is a beneficiary? What is the difference between them? So beneficial owner is a person who has actually directly or indirectly given a consideration for that asset, and thus the asset is held for the immediate or future benefit. Okay. But beneficiary is a person who derives an immediate or future benefit directly or indirectly in respect of that asset, but the consideration would not have been provided by that person. So that is the difference between a beneficial owner and a beneficiary. I hope you understood the difference between the beneficial owner and the beneficiary. It is given, like I said, explanation 4 and explanation 5 in the section 139 of the Act. So now when it comes to determining the residential status, I am sure all of you might be aware how to check the residential status. So it is defined under section 6 of the IT Act. So even if it is a company, individuals. So when it comes to individuals, mainly the ordinary resident status is what it has to be looked. Even though you are aware, I'll just briefly just go through it. So to determine the residential status of an individual, the first step is to ascertain whether he is resident or non-resident. If he turns to be a resident, then the next step is to ascertain whether he is an ordinary resident or a not ordinary resident. So an individual will be treated as a resident in India if he satisfies any of the following conditions, any or both. So he is in India for a period of 182 days or more in that year, or if he is in India for a period of 60 days or more in that year, and for a period of 365 days or more in immediately preceding 4 years. If in that case, then he is considered as a resident. So now to see if he is a resident or a non-ordinary resident. So a resident individual will be treated as a resident but not ordinary resident in India if he satisfies the following conditions. So he is not resident in India in 9 out of the last 10 years immediately preceding the relevant year, or his stay in India is for 729 days or less in last 7 years immediately preceding the relevant year. And with respect to assessment year 2021-22, the Finance Act has inserted 2 more situations where a resident person is deemed to be not ordinarily resident in India. So these are the 2 conditions. One is an Indian citizen or a person PIO whose total income other than the income from foreign source exceeds 15 lakhs during the previous year, and who has been in India for a period of 120 days or more but less than 182 days. An Indian citizen who is also deemed to be a resident as per section 618, where the foreign income is more than income is more than 50 lakhs and is not having any tax liability outside India. So a resident individual who does not satisfy any of the aforesaid conditions in the step 2 will be now treated as a resident and ordinary resident. Now the residential status of an HUF. So basically we see who is controlling, where is the control and management of the affairs of the HUF happens. So if it is wholly outside India, if it is not in India, then it is a non-resident. And if it's inside India, if the affairs are managed partially or wholly inside India, then we look at the residential status of the Karta. If the Karta is an ordinary resident, yes, the residential status of the HUS will also be ordinary resident. So now coming to why reporting on the foreign assets is crucial. The major reason is the globalization of wealth. As you all are aware that we are living in a largely globalized world. Right from the clothes you wear, the vehicles, or any matter in that case. So they are all highly globalized. So even the way we used to invest our money, that is also become largely globalized. Even our traveling, everything has largely changed. So now the income for many people, the income and assets are not just restricted to one country, it is across the nation. So this globalization of wealth has resulted in the rising need for governments to ensure that these assets are properly reported. It is not just for our countries, for all the countries, this is a very, very important part to ensure that they are getting the right taxes for the country. And another thing is for government's focus on the black money. You all would be aware of the Panama report or the Pandora leaks, all those things you will be aware. So there has been a lot of focus on black money post that. And we have been trying to crack down on the black money and then just get the foreign income and assets reported. And if you do not report your foreign assets, there are risk of assessments, penalties and prosecution. The Black Money Act, as you are aware, the failure to disclose the income or asset, it leads to assessment under Black Money Act, penalties and as well as prosecution. So it is very important that to avoid this penalties, prosecutions and the taxes or fines, that reporting of foreign assets are done correctly. And the deadline for reporting for this year, it is December 31. So this is like we were discussing. This is an attempt to reach out to you that now who have not filed the ITR, including the foreign assets or income in their ITR, they still have time. Please reach out to them, ensure that they are complying with the reporting in the Schedule FI and FSI. Now what qualifies as a foreign asset? So anything which is held outside India, we are told, but it can be any bank account, let me say any savings or investment accounts. And the bank account need not be an active account. Like for example, it may be a bank account which somebody has taken long back and it is lying passive or it's like dormant. There is no transaction. But even in that case, it has to be reported. Or if you have any financial interest in entities, like you are having some shareholding, partnerships or anything in any companies or any entity over there, that also is considered as a foreign asset. And cash value insurance policies. So life insurance policies that have a cash value component issued outside India. So that is also a foreign asset. Immovable properties, it can be anything, it can be real estate, and even if you are having a capital gain or capital loss when you sell that property, even if you are having a loss, irrespective of that, it was a foreign asset because you are held it during that particular period, so that is also a foreign asset. Then equity, debt interest, custodial accounts. So this may include foreign stocks, bonds, ESOPs, shares, equity, or anything which is held abroad. And it is any dividend if you are getting from that also, it is all on accrual basis. It need not be that has been actually received in the account. So if even on accrual basis, anything you are getting from this assets is also a income. Trust beneficiary roles in foreign trust, that means any roles which you are holding it in the foreign trust. And signing authority, if you have authority to sign on any bank accounts abroad, it also qualifies as a foreign assets. But there are certain exemptions, like foreign nationals on visas, like foreign citizens residing in India under employment, business or student visas, they don't have to declare their foreign assets if the assets were required before they became residents. And also, when the person was not a resident of India, he need not report if no income was earned from these assets during the current financial year. And there is an exception to mandatory ITR filing requirement for individuals who are beneficiaries of assets located outside India, provided the income from such assets is already included in the income of the beneficial or legal owner. So, I was telling that section, fourth proviso mandates that all the beneficial owners and beneficiaries, they all signing signatories, they all have to file the ITR. But if it is already, the income from the asset is already, and the asset is already shown as income of the beneficial or legal owner, then the beneficiary need not file the ITR. This is given in the fifth proviso to section 139. Now, what if you fail to declare your foreign asset or income? So, the section that primarily tackles the Black Money Act. The Black Money Act, Undisclosed Foreign Income and Assets and Imposition of Tax Act 2015. So, this is come into effect on 1/7/2015, and under this act, assessments, penalties, and prosecution is there. So let me say primarily you showed the income, but you just failed to disclose it. You just failed to disclose that asset in your ITR. So then section 42 is there. Section 42 and 43 are the sections in the BMA Act which levies a penalty of rupees 10 lakhs. So here section 43 is for failure to furnish the return, and section 43 is for failure to furnish in the return of income the information. So if you are like, probably people might think I am below the income tax limit, so I don't have to file the ITR, and though you are having some foreign asset. So in that case, section 42 will get attracted. But you file the ITR, but then in the ITR you forgot to disclose the information, then section 43 of the BMA Act gets attracted. So previously, the limit, the 10 lakh penalty was given if you fail to report anything above, like any asset, if you forgot to disclose above 5 lakhs. So this budget 2024 had brought a relief to the taxpayers. And in fact, before budget 2024 amendment, it was this 5 lakh limit was only given to the bank accounts. Now it is given to all the assets other than the immovable properties. So it will not apply to foreign assets if their value does not exceed rupees 20 lakh. And this is with effect from October 1st, 2024. And the penalty which we are discussing here, and there is, unlike the most of the penalties in the Income Tax Act, it is regardless of whether the foreign income is taxable or not, as long as the asset exists. And it is a mandatory one, and there is no scope like 1% to 10%. It is a 10 lakh straightaway penalty. And the other consequences, like as per section 3 of the BMA Act, if you forget to disclose and you don't report income, the assessee is chargeable with tax at the rate of 30% in respect of the undisclosed foreign income and undisclosed asset. So what is undisclosed foreign income and foreign asset are given in detail in the Black Money Act, and which is basically not reporting it in the income tax returns. So this will be charged to tax on its value as on the 1st April of the previous year in which such asset comes to the notice of the AO, and in addition to tax, interest is also charged over the tax. So let me say this asset was acquired in 2017-18, but now it has come to the notice of the AO. So now when the proceedings is, when we are doing this, now we will calculate as asset we have received it this time. So the 30% will be taxed on that value of the undisclosed foreign income and asset, and it will be calculated based on the fair market value. It will not be not on the amount which you have used to purchase that asset. And the method of calculation of this assets and everything is given in the rules of the Black Money Act. You can refer that for the detailed calculation for each assets. It is given in the rules of the Black Money Act. And besides this 30% tax, there is also a penalty at the rate of 90%. That means if 10 lakhs is the tax, then 3 times, like 30 lakhs will be the, so it is 90% of that you'll have to pay. So it involves tax, interest as well as a penalty. And penalty, this is for the proceedings. Other than this non-disclosure, the penalty is again separate. So whatever I was talking about, section 42 and 43, that is like non-filing of ITR, that is again separate. This is for the proceedings. This penalty is coming under section 41 of the Black Money Act. And then it also calls for prosecution under sections 49, 50 and 50 of the Black Money Act. So this prosecution, it is like if the proceedings are happening under Section 10 of the Black Money Act, prosecution will happen under Section 51 of the Black Money Act. 49 and 50 are for non-disclosure of your assets, and if it is found that you have willfully tried to evade the taxes. So if it is like books of account you have fabricated, yes, there is some willful attempt to evade the taxes, then the prosecution also comes in, and it can be like from 6 months to 7 years under 49 and 50, and under Section 15 of the Black Money Act, it goes up to 10 years of rigorous imprisonment. And who is liable for the prosecution? If it is an individual or HUF, individual it is a person, but for companies whoever were managing the business of the company, the managing directors, all of them will be considered as responsible. So prosecution will be launched against all the persons responsible as well as against the company. Now if it is an HUF, it is not just a Karta. All the members of the HUF are considered as equivalent to directors. So prosecution will be launched against all of them. And like I was saying, the willful attempt to evade tax, interest or penalty under this section, which comes under section, if it is falling under 51 of the BMA Act, it is now also recognized offence under the PMLA Act. So we can also refer for the money laundering activities, and further proceedings can be initiated under that as well. So other than the penal proceedings and the assessment proceedings under Black Money Act, even in Income Tax Act, with respect to the income which you have not offered for taxation and the source of asset is not disclosed, provisions will be attracted under the Income Tax Act as well. So CRS and PATCA, this is the most important arena through which our department is getting data. CRS is Common Reporting Standard. This was developed by it's an OECD model where to ensure automatic exchange of financial account information helping foreign residents to their respective tax jurisdiction. So all the participating countries of this CRS, they share information about the non-residents of that country to the respective tax jurisdiction. It's a kind of a mutual information of the mutual exchange of the information. So they usually share the tax identification number, the account details, interest, dividends. So all of these are reported under the Common Reporting Standards, and India has also been receiving information under Common Reporting Standards. And Foreign Account Tax Complaint Act, commonly known as FATCA, this was enacted by the USA to identify US taxpayers' foreign accounts. So financial institutions report accounts with substantial US ownership and non-compliance attracts a 30% withholding tax. And India signed an agreement with the US in 2015 mandating reporting of US linked accounts by Indian financial institutions. So whenever there is, just like how they are sharing information with us, any US resident who is having some investment in India, India is also exchanging information back to them. So this, this information is already with us. So taxpayers must ensure accurate reporting to avoid scrutiny from global data sharing mechanisms. Now coming to Schedule FA in ITR. So what is Schedule FA or foreign asset? So it is a section in the income tax return where you must declare your foreign assets. So who should file it? Like we have already discussed, it is mandatory for all residents and ordinary individuals, resident individuals and HUFs. So all of them should report your foreign assets in the ITR if you have any. So the Schedule FA has a lot of data which have to be filed. So for the purpose of this schedule, what you have to look is, like with respect to, let me say, assessment year 2024-25. The calendar year ending as 31st December means the period comprising from 1st January 2023 to 31st December 2023 in respect of their foreign assets or accounts. So there is a difference here with respect to the financial year assessment year that you usually use in the income tax return with the calendar year. So the reporting is for the calendar year. The reason being the financial years is different for different countries. So it is when the countries exchange data, it might become little difficult. So what they have done is currently what we are following is on the calendar year basis reporting. Okay. So assessment year 2024-25 when you are filing the return, the taxpayer should mention all the assets which are held from 1st January 2023 to December 31st December 2023. And for the purpose of this schedule, the rate of exchange for conversion of the peak balance or the value of investment or the amount of foreign sourced income in Indian currency shall be the telegraphic transfer buying rate of the foreign currency as on the date of the peak balance in the account or the date of investment or the closing date ending as on 31st December. So this telegraphic transfer buying rate in relation to the foreign currency means the rate of exchange which is adopted by the SPA and the SPA Act for buying currency and which is being the regulated every time, specified from time to time by the RBI. So if you want to know what is your telegraphic transfer buying rate, you can you will get the details from the bank. The respective banks usually give this data, so you can get those details from the bank to know the exact values. So these are different tables which are there in the Schedule FA which you have to report. So one is a foreign depository accounts. So foreign depository account, depository account, custodian account, like some of the definitions you can find it in Rule 114 of the Income Tax Act. Okay, Rule 114 Act, not everything, but some of the definitions are available under Rule 114 of the Act. So depository accounts usually includes your bank accounts, your time deposits, etc. And the custodian accounts is maybe mostly any investment account which is held by a custodian bank. And foreign equity and debt interest, it includes your shares, mutual funds, ESOPs, etc. And foreign cash value insurance, this is an insurance contract usually, with some cash value. It varies for countries. With the US, this cash value component should be more than $50,000. Generally, it is considered as generally they report the cash value. And this cash value, what it means is usually the greater of the, when the policy gets surrendered, some amount you might get. So it may be the greater of the amount to be received when you surrender or terminate, or how much you can borrow using that insurance. So whichever is higher, that is called as a cash value. So foreign cash value insurance contract or annuity contract. Then financial interest in any entity outside India. It can be any interest in companies or LLPs or any firms which you have outside. Immovable property, definitely real estate. And capital assets, it can be jewelry, it can be vehicles, or any very, very costly paintings, anything of that assets. Then whichever is not getting reported in the below tables, you do it in E, F and G. I'll just go through each of these schedules. For example, in table A1, we have already said that it is details of the foreign depository accounts that you have to give. So in table A1, you can see that there is a country code which is mentioned. So the country code, if you do not know the country code, you can use the IST code of the country. In case, for country code, you should generally use the IST code of the country. And if they are asking to use a TIN, the taxpayer identification number, if you do not have the taxpayer identification number of the SSC, or it is not allotted in that country, you can also give the passport number of the taxpayer. And so country code, then let's just come to the table column A1, which is details of the foreign depository. You can see that there are different fields to be filled. So here the peak balance in the account during the calendar year ending as on 31st December. Okay. And the closing balance at the end of the calendar year ending on 31st December. And the gross interest paid or credited to the account during the calendar year ending 31st December is required to be disclosed after you convert the same into Indian currency. Now, like I said, converting to Indian currency, you have to use a telegraphic transfer buying rate, which is usually provided by the respective banks. And now, table A2, you can see the foreign custodial accounts. Here also, you have to give the peak balance in the account during the calendar year, the closing balance, and the gross amount debit or credited to the account during the calendar year ending 31st December. And the nature of gross amount paid should be specified from the drop-down list. There is usually a drop-down list. So from that you can choose if it is a interest or dividend, if it is a proceeds from the sales, so those information you can do it from the drop-down. And A3 is the details of the foreign entity. So here you will have to give the initial value of investment, peak value of investment during the calendar year. That means this is the highest value of investment you had. And the closing value of the investment also you have to give. Then other piece like the gross interest paid, total gross paid, credited, etc. All these, like I said, to be converted into Indian currency. Table A4, the cash value or the surrender value of the insurance contract or annuity contract as at the end of the calendar year ending as on 31st December. So if you have any confusion on this cash value insurance contract, you can refer to Rule 114F where it clearly mentions what are the conditions. So cash value, it does not usually involve if the payment is made out of death or some accidents or morbidity. It is the component when you get when you are surrendering or terminating, or when you can probably trying to take any borrowings from that. Now table B, you can see any financial interest in the entity. So here also you have to give the value of the total investment at cost held at any time during the calendar year ending as on 31st December. And the nature and amount of income accrued therefrom during the calendar year is required to be disclosed after converting it into Indian currency. So the further amount of income which is chargeable to tax in India out of the foreign source income should also be specified in column number 10. And the relevant schedule of the ITR where this income has been offered to tax should also be mentioned in the column number 11 and 12. And for this matter, financial interest would include, it can include anything for example, if the residential assessee is an owner of a record or holder of a legal title, if you are an agent, nominee, attorney, or person acting in some other capacity on behalf of the resident assessee with respect to that entity, a corporation in which the resident assessee owns directly or indirectly any share or any voting power, a partnership in which the resident assessee owns. So all of this comes in the financial entity, you can include it. Now coming to table C. Here the total value of investment at cost in the immovable property held at the time during the calendar year and the nature and amount of income derived from the property during the year is required to be disclosed. And amount of income which is chargeable to tax in India out of the foreign source income should also be specified here, just like table B. And in table D you cover any other capital asset. So here also you have to include the value of the total investment at cost of any other capital asset held at any time and the nature and amount of income that you derive from the capital asset. Here also you can again show how much of that you have offered for taxation in India. But for the purpose of disclosure in table D, capital assets shall include any other financial asset which is not reported in table D, but it will not include stock in trade and business assets which are already included in the balance sheet. Now coming to table E, here you have to give the accounts in which you are the signing authority. So here the value of the peak balance or total investment at cost in respect of the accounts in which you have a signing authority during the calendar year is to be disclosed. Please note that only those foreign accounts which have not been reported in table A1 to table D should be reported in this table. And in case the income accrued is already taxable in India and how much you have already paid the tax, those details you can give. And coming to table F, which is for the trust. So here the details of the trust set up under the laws of a country outside India in which you are a trustee, beneficiary or a settler is required to be disclosed. In case any income derived from such trust is taxable in your hands, again you have to report that. Now table G comes with the details of any other income which is not included in the above tables. So these are the different tables under the schedule FA which you have to include. Now coming to schedule FSI. So schedule FSI is foreign source income. It's a section where you must declare your income accruing or arising from the foreign source. Like I said, you have to report it even if it is just accrued and you have not received that income. So here also again you have to fill different fees. Like for example, country code you can use ISD code, taxpayer identification number. Many countries have. If that country do not have, you can use a passport number instead. Okay. And in any case, tax has been paid outside India on such foreign source income and tax relief as admissible is being claimed in India. The relevant part of the DTAA also you have to include here. And please ensure that the details of the foreign tax credit and income are reported in Form 67 in order to claim this credit. Now we have the Schedule TR, which is a tax relief in the income tax return. So this schedule basically provides a summary of the tax relief claimed in India for taxes paid abroad for each country. It summarizes the detailed information provided in Schedule FSI. So you can see that here also again country code, taxpayer identification number you have to give, and total tax paid outside India. So all these things you have to fill it. And in column E, you have to specify the provisions under which tax relief is being claimed. That is under section 90A or 91. So 90A is when we have the agreement with the countries, and 91 when we do not have the agreements with the countries. So in that case, you have to give those details also. And the total of the value from the, you can see that here there is a total for the Schedule FSI. So tax paid outside India. So all these total values you will have to take it to the Schedule TR. And there is also this Schedule SSN liability. So it is not mandatory for everyone. So this was introduced in 2016 after wealth tax was abolished. So Schedule AL is usually filed by people who are having who are likely to belong to high net worth individuals and whose net income is more than 50 lakhs. And there is a difference between the Schedule AL and Schedule FA. So Schedule FA, let me say you are an HNI who is having more than 50 lakhs and you have certain things to be reported in your assets and liabilities. So you have to report both in the Schedule FA as well as a Schedule AL. So in Schedule FA we are using the calendar year. And let me say you had some stocks which you held for that year. Okay, and you just held it for even some period. That also has to be reported in the Schedule FA. So maybe maybe you had held it for 2 weeks. But in Schedule FA, everything have to be reported. But when it comes to Schedule A, you will only put the final assets and liabilities in that. And here we will put, in Schedule A, we put it at the purchase cost. But in Schedule FA, you have to report the market value as well of that asset. So that is the difference. So in Schedule A, if applicable, you have to file that also. So just because you have filed Schedule FA, do not think that I do not have to report in the Schedule A. So I am just summarizing. So what you are doing, like what are the steps that you have to complete for the reporting of your foreign assets or income. So basically identify what are your asset categories, like it is a custodian or depository or a signatory, whatever it is, identify the asset category. Give the asset details, like asset name, country, like I have given the different tables where you have to give. And then record the financials, what is the initial investment, opening balance, peak balance, so closing balance. So these details you have to give. Then income, how much of income you are getting. And claim your, if you have paid taxes abroad, you can claim your relief under the DTAA. The CBDT's awareness campaign, like I said, CBDT has launched its compliance cum awareness program for 2024-25 with the main intention that ignorance should not be a reason for people not to report this income and assets in the ITR. Many times we are seeing that they were not aware, or they just say that I was under the assumption that my employer would take care of it. So with unintentionally many of them are missing out this Schedule FA, FSI filing. So we have leveraged technology and we are sending SMS and email reminders to taxpayers who may be having undeclared foreign assets. And it's a targeted assistance because wherever we are having some information, especially in the high value foreign assets, we are focusing on them and trying to send them messages. And our awareness is also to encourage the accurate reporting of the filing of Schedule FA and FSI, because Income Tax Department believes in voluntary compliance. Now, yes, the benefits of transparency. If you file it correctly, see, it leads to compliance and it also leads to good governance. Okay, you build the trust with the tax authorities and you can avoid unnecessary scrutiny. We'll issue notice, you have to come, you have to respond. So a lot of things are there. If you voluntarily comply, it helps both the sides, and you can avoid the penalties, assessments, prosecutions, and claiming the tax reliefs. So if you do not report it, we will also not give you the tax relief. So you can avoid a lot of issues. So please ensure the compliance with the Income Tax Act and the Tax Money Act. And for this year, 31st December is the last day. Take a note of it. And by adhering to these requirements, you will avoid hefty fines, and you are also helping combat black money, thereby helping nation building. So as you know that cost more than the revenue is the backbone of administration. So as tax administrators, we are just trying to reach out and ensure that maximum compliance is happening, and maximum taxpayers and members from your collector area also, you can also pass on to the images. Thank you. That's all.
Thank you for the wonderful presentation. Now I request the audience to raise your questions regarding the Schedule FA, and DG sir has also requested that please restrict the questions for the agenda of the day, that is Schedule FA, and whatever question be it, it can be as per the act, also as per the written also. You are facing some difficulties, filling up in A1, A2, A3, A4, etc. Plus, respected sir is also, at the end, he is also, requested for you to come out with suggestions for the new act or the simplification. That suggestions also they will take it to the concerned authorities. Then you can circulate. Any questions, audience? Yes, sir, please.
So, is it right to say that for the FA schedule, the reporting will be on the basis of the calendar year, which you all have heard, but then for the purpose of FSI, it will be a financial year, because the income tax return what we prepare is for the financial year. So, is it a correct understanding or different?
Yeah.
This is right.
Rana, madam, you would like to answer? Or Shama? Yeah.
Schedule FA, you have to report based on the calendar year, as I clearly told. FSA, you have to report based on the financial year.
Yeah, so the reason for asking this question is, one, is when we always prepare this return, we always have this thing in our mind that because of this anomaly, we may have received any notice or anything in the future. So, example. So, I think it's clear now. So, that is taken. The second one is, the Form 67, I understand the due date of filing is 31st March, right? But then, what is it wrong? Because I think Form 67 can be filed on 31st March.
So, basically, return to file before the filing of return. Then CPC will come out with the intimation and foreign tax credit will be denied.
Correct, yeah, because our point was the belated return is 31st December.
Correct.
And not belated, revised return is 31st. Yeah.
So, next belated all due date is 31st now.
Yeah. Okay.
So, the very important point here is, sir, about the FSI as well as the, the calendar year.
Yeah.
So, what, suggestions have come out from our members is, they are requesting is, why don't you put one column for currency also first? Currency, suppose it is pounds or suppose it dollars. Because very difficult, otherwise there is income mismatch there. That is one suggestion they have come out. Second suggestion, I thought one more suggestion came out is, there is no column to fill up foreign liabilities. Unlike in Schedule FA, that Schedule AL. Schedule AL, that is first A is immobile properties, B is mobile properties, C is liabilities in relation to immobile and mobile. So one of the suggestions have come out for respected services to request them to put the column of foreign tax liabilities, in the Schedule FA. That is one other suggestion.
We'll take and fight.
Yes, thank you.
In fact, I am part of the CRS Patka Risk Assessment Committee at the national level. So we are doing a lot of data analytics at the back end, and then we are kind of not pushing all the data to the field offices also, so that like we want to have a focused approach so that everyone is not disturbed indiscriminately. And we do some risk analysis, right, based on account balance, so many other parameters. Students go abroad, there they may have opened accounts, the parents transfer out of 80 loan or whatever it is. So we have a lot of very data-driven heuristics. And this, whatever suggestions that you are giving, definitely will factor in the next committee that we will take it forward.
Yes, please.
Last question, yeah.
Please.
So this is related to, for example, the multinationals generally route the share plans through, let's say, a company called Compute Share Services, example, which is basically a broker who manages the account. So the point is, what a lot of times these questions come up is whether the Compute Share has to be declared in the A, and then in the C part, we as well have to declare the shares what we held with the company. So let's say, for example, there's a company, multinational, let's say Shell, for which there is a share which we held. So what we are doing is that shares held in Shell are reported in the C, if I am correct, and then the one who is holding the share is, let's say, Compute Share Services, is what we are reporting A. So is that the right understanding? Because again, the reason for asking is every chartered accountant has a different interpretation to it. And they say that if you are reporting the company, that is more than enough in the C. So why should we go for the A? Because A is only for the custodial accounts. So that's the reason this question.
So basically confusion is between A and C.
C. So point is whether it has to be reported twice because the custodial account is one
Not
managing the
required.
shares.
Once you are declaring A, for example, you need not report elsewhere. You need not report twice. But the confusion comes here because of the schedule AL. Some assets are declared in schedule FA, plus this will also have to be declared in schedule A. That is the problem, there is a duplication. To that extent also, they have given suggestions. Because what I have to declare in FA, invariably because my income is more than 50 lakhs, it will also go to schedule A. So here he is telling is no, if you have declared, there is no concealment. So the columns may not make much difference. You need not worry because you have declared it. So, yes sir.
Just to add to his
Yeah,
point,
please.
see, if you have shares in the computer share account, I mean the example which he has given, that need to be reported under A3. But if you have shares,
Equity.
yeah. But if you have a cash balance in that account,
Yeah.
sometimes we see cash balance as well. That needs to be reported under custodial account in A1.
I agree.
No, of course. No, I think I just correct this because I think it's like it was not the C, it was the A3 which I was referring. So now I understand. So basically, if there is a cash balance, then only it will go on the upside. Otherwise, the shares will be in the A3. Thank you. Thank you.
So there is a rental income from mobile import also. Actually, it was in the hands of Tata Ritna, but actually it was originally bought by the father Ritna, it referred to Tata Ritna, who has to report the foreign income as well as the assets. As per section 64(16), it should be a clubbing provision, so it has to be offered in the hands of father Ritna. But it's a foreign income, who has to report it? That is Tata Ritna or father Ritna?
The beneficiary is there, but is the legal owner or one of the beneficial owner is already reporting that, then it need not be reported again by the beneficiary.
What about the income? Income who has to offer?
Then there is a clubbing of income, right?
Yes.
So it has to come from the father-in-law.
So in that case, income to be offered in the hands of father-in-law, but assets to be offered in the hands of Tata-in-law.
Yes.
So in such cases, what will happen? The department will issue the notice saying that you have not offered any income. Then we have to report.
You can always give an explanation. If some notice comes, you can give an explanation to that.
Yes sir. Sir.
So regarding foreign retirement accounts basically. So under which head that needs to be reported? We do have a residual head as other capital assets. But whether retirement account qualify as a capital asset, whether that needs to be reported under other capital asset. Like a 401k or IRA accounts, what we come across, whether that needs to be formed part of Schedule F.
Yes, everything has to be reported in Schedule F, whatever foreign asset you are holding. This retirement benefit account also has to be reported, and it depends on nature of the proceeds you are getting. You can, as you said, if this it may be income from other sources, or if it is in the nature of perks or anything, it has to be reported in the salaries.
Oh. I would like to add, ma'am, what is the problem they are facing is this retirement and pension fund accounts basically. In US, it is taxed basically, it should be taxed only on withdrawal. It should be taxed only on withdrawal. But as per the Indian law, based on accrual system, every year, it has to be taxed on accrual basis. So if I am taxing on accrual basis each year, then at the time of withdrawal, if I taxing you, as per US laws, I have to pay tax there. Problem arises in the claiming of the double taxation relief now. That is one big problem which has to be addressed, although that form has come.
Rule 10EE has introduced.
Yeah,
so that
Rule
takes care of
21
that.
is very, very complicated. If you see the columns, they are asking since when you open this account. For example, 25 years are over. I have to go from the date of opening this account, take all the details. This is one big problem we are facing.
That you like to
Sir,
kind of
we will give a suggestion in writing.
Printed by FTR and
Yeah, it's a very complicated form to fill actually.
Sir, investment in overseas entity.
Sir?
Yeah, investment in overseas entity, equity investment. To be reported as A3, foreign equity and debt interest, or financial interest in any other entity.
What is it?
Sir, equity investment held in overseas entity.
Right.
Is it to be reported as in table A3, foreign equity and debt interest,
Yes.
or financial interest in any other outside?
A3, sir.
A3.
A3, sir. Which one, sir? Financial interest basically they are telling this, you may have, you may be partner in a firm or you may be partner in LLP.
Companies or LLP
Yeah.
are having any kind of financial interest.
Or
Then anything
you need to
related to
report.
equity and debt, it should come under A3.
Because it's a specific interest.
So one thing I have not is this one, peak balance. So peak balance is it to be arrived based on market value in foreign currency or INR?
Everything is to be converted to INR.
INR, then only peak value has to be.
Yes.
Then closing value it is cost or market value.
Almost all the balances at that time is on the cost value, right?
Because initial value, peak value and closing value. So closing value, whether it is the initial value, whatever we have expected, or it is to be translated to closing market value.
We convert it to INR, then it should be the market value,
Market cost.
market cost. Because the schedule FA includes actually the market, but when you come to schedule A, like I was saying, you can consider the cost. But in most of the foreign assets, it is the market value.
Madam, what practical difficulty they are facing is, suppose these are unlisted shares, we are not able to get the market valuation. Actually, this is a practical problem we are facing. As per law and rules, you are right, but this practical problem they are facing. Again, K1, for example, investments in K1, if you are a partner, what happens is, we cannot get the value as on, because it is January to December, and I have to report as on 31st of March. So I am not able to get the income details, it becomes very difficult for me to report it. It is practical problem, I am telling you, practical aspects what we are facing.
now like how do you address that? Now when I will
Yeah, so these problems we are facing, so how we are doing it is very difficult for us. Or we are taking only on actual basis. Whatever K1 form we are getting, as per that basis only we have to declare. In order to avoid mismatch basically.
Initial value.
Sir?
Initial value.
Yeah.
For next step, that should be closing value of previous year or purchase.
That if it is initial cost, we will always be the original cost of purchase once. You cannot take the closing value, this becomes the opening value. It is always there.
Last question. In case so, here is the people are not.
Pardon, sir?
Early.
Up to 31st December, revise the return for the 24-25. Last 2 years, 5 updated return, 25% penalty, up to 1 year, beyond 1 year, up to 2 years, 50% penalty. You want to declare still further, file a petition under 119(2)B or 2A for refund and for tax payable. Pay the tax, it will appear in 26 years. take a manual copy of the return. File it before the assessing officer that you have paid tax, as well as file a petition before 192B, because this you have declared before the department practically. They may, consider request, or they may reject the petition based on the hearing. But you'll have to show your hardship, genuine hardship. But this year definitely we can file, sir. With interest, with the revised return. You cannot file return beyond December, original return. Only updated return I can file, but I can go at least 2 years.
Updated return, you can only disclose foreign asset. Foreign income asset, you cannot disclose in updated returns.
So just to add to that K1 point, supposedly a person has invested in a company, like say basic amount of $25,000, and that like it is a fund. So there was not much activity in the fund, and it just incurred a loss of $50 every month. It is just having a losses, and then the final values got reduced to his investments got reduced as per the K1 to 20,000. So in the closing balance, because actually I don't know what he will get. He may get shares for that, or he may get the money as a refund. We don't know. So shall we report the 20,000 only as the closing value as per the K1, or the closing value of that fund? What shall be disclosed? As per the K1, shall we disclose it that way only? Because you are telling the market value, but we don't know the market value.
We cannot.
Yeah.
Actuals. Better. Yeah, actually disclosure.
You can substantiate later.
So as per the K1, we can disclose it.
As I was mentioning, like we are not going to pick all the cases for, but like still like as a measure of voluntary compliance, like just disclose voting compliance, let it be met, then the gap we can see there are.
So again, this is regarding K1 only. Say K1s are basically issued by the US partnerships, which are pass-throughs. But in India, pass-through concept for a partnership is not recognized in the law. So a clarification with this respect is very much appreciated as to how US partnerships especially needs to be treated for India income tax purposes.
So we'll take it up with the GPS that will come out with the kind of FAQ.
One more point, if something is mentioned in the DTA, then that will take precedence over that.
Yes.
DTA is for benefit of the taxpayers, not for their disadvantage.
So the initial value we have to report the purchase price, the original cost of the price we have ordered. The peak value is not does exactly that we have to report the peak value. And how, I'm just trying to understand what logic or what information the government wanted to get by taking the information as a peak value. Practically getting the peak value of any investments, I don't think that's practically possible for any investments in equity or the shares.
No, probably why they are asking for the peak values, probably they are trying to link the opening balance and the peak value and the closing balance. If suppose there is an income in the form of an accrual, suppose there is income in form of accrual, they are trying to see whether it has an element of income, so that they would want to tax
Peak
themselves.
value in terms of market value.
Yeah. Probably.
How will we track? Let's say that even in India, if we are investing in the share market, how will we get the peak value? Is it on the closing price basis, or during the day? How will we track?
For which one?
In the foreign assets only. Let's say that the client have investments in US and he is actively trading in US stocks.
So, for example, if you are trading in US account, the national should be available. For example, if they are listed, unlisted, I told you there is a problem. It's very difficult for us. So, probably wherever it is listed, you have an opportunity or you have a chance to get to know the peak balance and declare the same. Yes.
Sir, on the peak value.
Pardon, sir?
On the peak value.
Somebody. Once I'll get you.
Sir, on the computation of peak value, there are two aspects involved. One is the value quoted in the stock market at the forex rate. Then we have to see the conversion rate. So that may not
Daily transfer rate, SPA.
Yeah. So there it may change.
100%.
Peak value, the actual value may be less than the peak value of the market, but because of the exchange rate, it will be higher. How do you
No, we will go by this only, TTU.
No, TT correct, but yesterday the rate was $66 and the exchange rate was 88 rupees or 84 rupees. Today it is 65 rupees, but the exchange rate has gone up. So we have to calculate both and find out which is higher.
Not on the day of the telegraphic transfer rate, that should not be taken.
No, but you want to know the typical value in Indian rupees, sir?
Yeah, Chetan sir is giving an opinion.
So I am just saying that one, the telegraphic transfer rates may not vary so much, over a period of time. Only period considered is very long. Then I think the variation in the ratio should be very huge. So that is one. Second thing is that peak value as on the date of, peak value of the share in the entire year, you will have to consider based on the rates which are available in the stock market.
Because of the exchange rate, it could be in April.
That's what I understood the question. So, like in Indian context, what do you do? How do you calculate the peak value? If these shares are
There is no exchange, no conversion involved.
no conversion is not there. So in that scenario, you will take the peak value.
Indian rupees only.
In Indian rupees only. So you take that and then on that day, whatever is the peak value, you convert it into Indian rupee and then.
Yes, sir. Sir, one second. Mic, please.
Practical question. Sometimes the value of the asset is such that the cost of repatriation is greater than the listed value of assets, and the decision is taken to abandon assets in India. Not to bring it, but to treat it as abandoned.
Held at any time during the year.
Yes.
Column itself says, you see, held at any time during the year.
So how do I treat it? Whether I should disclose it, in which case it becomes a problem for me. And I cannot bring it back also because the foreign exchange rate variation is adverse. And I cannot treat it as an asset per se. The law says it's an asset for me. If I have to repatriate it, it results in loss for me. So I decide to abandon it. So how to disclose it?
No, even before you abandon the asset, what was the peak value or what was the market value? I have that you please declare, that's all. Because it is crystal clear on that it held at any time during the year. Basically, there is no evasion on the income part. You have declared the income. Because if there is a capital gain, etc., FSI or capital gain should be, you are going to declare, not addition. Any other question, sir?
Sir, when we are looking for ESOP stock options, A3, we have a peak value column. Now I have got one share allotted in February, one share allotted in April, like that it could be. Now for each line item, should I see peak value from that date till the 31st December or can I take one usually? Because it's becoming very tough to see line by line item for each allotment. Let's say somebody has for some 5-6 years, then fine. But something I get for the previous years, before 1st January, at least I can take for the full year calendar year. But something I get mid-year, like something in November or December. Then should I see peak value only for that month or how should I do it?
We'll come back on that.
More queries that can be given in
Yeah, we will
writing
take
and we will respond.
Sure.
It is from the date of acquisition till the closing day.
Yeah.
That is the peak value should be taken, not before. Each line item becomes very
Don't worry, sir, because of the amendment made in the budget, up to 20 lakhs you have not declared also nothing to it. The department will not, because the notices will come from this honorable here. So up to 20 lakhs we are safe. They themselves gave the recommendation, genuine, bona fide, and it is up to 20 lakhs. At least that much cushion is there. But we have to declare. But up to 20 lakhs at least there is a cushion there because of the amendment made in the budget.
Sir, 20 lakhs is cost value.
Pardon, sir?
20 lakhs.
We'll suggest, sir. Yes, sir. Yes.
Can we say this finally, that whatever the confusion with the particular line item where the reporting has to happen, if we are doing the disclosure, we are good enough, right? Because this always is a debate that whether it has to go to A1, A3, A2, this and that.
That is to a large extent that will solve the problem.
Yeah.
Yes. To a very large extent that will solve the problem.
Yeah.
And as I was mentioning, the risk assessment committee, we meet at regular intervals. So like, you know, we have so many cutoffs, we have so many thresholds, beneficial thresholds, right?
Yeah.
I will not be able to reveal what are the heuristics, but then like, you know, we are conscious that undue adverse impact.
No, that's good. I think the one definitely thing which could be considered is a guideline on these, because while we see that in A1, A2, A3 there's a small clarifications which are there, but even after that as well there is always a big debate that whether this has to go into this line, and every chartered accountant has a different interpretation. So that's where I feel that it is good that because this is very important, because all the companies now are issuing the shares to the employees as performance, or even the employees are also buying. So that means sometimes the employee buy, let's say 20,000 rupees worth of shares, and he doesn't know that this compliance is necessary for them. And that's where I think it's very important in today's world. A detailed guideline will be of great help. That's my thought.
Point, check.
How do you report restricted stock units where the value to the assessee is zero? Because the company just gives it to him without any costing. So, and he doesn't sell it for a couple of years and there is no income. So how do you report the situation?
RSU, like ESOP is very restricted stock option, where the cost itself is zero. And there is no income also issued. And 2-3 years also there is no income. So whether the reporting also has to be done.
RSU is taxable on vesting.
Pardon?
RSU is taxable on vesting. RSU is taxable on vesting. So the moment it
No, that
was...
is for purchase.
That is the
No,
value of it.
that is the purchase price. But
that
today,
is your cost.
assessee it is zero.
No, but that is your cost. That's the cost. That's the cost.
As the cost is zero.
The cost is zero. To determine capital gain, fair market value as well the date of listing is the purchase value which we consider as basis.
Yes.
One, Shama,
Cost of acquisition is zero. That is what I said.
yeah, ma'am. Sir.
Any kind of foreign asset, both this cost of acquisition.
No, because the problem, the practical problem is if you put zero in the FAA column, the cost will not accept. If you put zero value, that is the practical problem.
Well, what solutions is coming is, regarding this RSU also, if I link it with the schedule AL, suppose there are many SSCs in India. Now they have they want to declare some gold jewelry or diamond or bullion, etc., which they have accumulated over a period of time, say at the time of marriage, betrothal ceremony, engagement, childbirth, etc., etc. Now, if I go to that column in schedule, because my income is more than 50 lakhs, I want to declare my gold or whatever, but I can't declare under wealth tax because 2015 wealth tax is abolished. Now I have got 1 kg gold which I have got source also, but I have not purchased. I cannot put that market value, I cannot put the cost of purchase. So what I am allowing here, at least if you tell them in the return, allow them. Sorry, I want to declare 600 grams, 700 grams, they should allow. But without cost, I cannot put a cost because there is no outflow from my side. Also, I cannot put the market value also because it will be wrong. Otherwise, you put the market value to declare it. Because if I declare asset, no, it will help me. Because in case of a search or survey, the officer may invoke 68, 69, ABCD, etc. So to that extent, no, I agree in case of seizure up to 500 grams, etc. for a marriage, all that is there. But provision is not there to declare in the return. So they were giving suggestions, jewelry, bullion, etc. is there. We want to declare that. But this, I have not spent out of my pocket. So therefore I am unable to declare.
Not only smart, always getting form design of return. It creates a lot of public conversations and it goes into some other arena also. But anyway, I discussed with KPL.
Yes. Yes, sir. Alan.
So this equity off-market
shares, transactions in our market, how to show it in this. Where the
No, off market what? Equity and that is the unlisted shares.
unlisted shares.
I think unlisted shares will have to take the cost only, sir, because it's difficult to get the market value. So you make a declaration, as I decided, you declare, I am not able to get the market value because it's practically difficult for me. So I will declare the cost.
You can also go through the rules of the Black Money Act. There are some computations they have given how to calculate for the fair market value of the unquoted equity shares or the quoted shares. So it gives some calculation of the height of the cost of acquisition. Certain calculations are there. So please refer the rules of the Black Money Act. It gives you more idea.
Sir, Alan.
I have a couple of suggestions as well as few queries.
Pardon, sir?
I have a couple of suggestions along with few queries.
Please.
The suggestion is since we have an extensive form already for foreign assets, why can't we have a date column also? For example, if different countries follow different financial years, we can have a date column that this data is as of this date. For example, if this is 31st December or maybe 31st July of last year, that also could be made part of the form. This is just a suggestion. And another thing is also I want to discuss about certain new kinds of assets which are now revolving in market, like virtual digital assets like cryptos, NFTs. We don't have any kind of provision, and we don't know whether there is a country also, whether it can be called as foreign asset also or not. It's a very grey area. These assets cannot be called as foreign assets because there is no fixed base for them. So a lot of people are also confused whether do they need to report this, because for example in Indian scenario we are restricted not to purchase any of them. But what about a non-resident who has acquired them? There are lots of scenarios they would have acquired it out of interest or maybe as an investment in different matters. So how do they go about and report incomes when he is a resident in when he at a subsequent date becomes a resident in country? So that is one of the matters which requires a little bit of attention. And then again, towards our finance minister's initiative, she wants to simplify the form. Why don't we just think about how the matter can be reduced, and we can discuss only on the core points of financial assets. Like we have unnecessary too much of data like PIN code, who is the depository, why is the depository, and this peak value. I think it's not that very relevant. We can unless at some point if you had an investment, you have disclosed the investment, that should be a sufficient compliance basically. Or else it becomes a hardship to bring out all the details from beginning to the year of end. In the view of simplification, this is a suggestion. And one more point. For example, people in India who have businesses abroad, it could be a proprietorship businesses in both the countries. Now we have a reporting in US as on 31st December. So they prepare a capital account, or all the transactions are up to 31st December. For example, we prepare our books of accounts. And in Indian scenario, we have our books of accounts till 31st March. Now, since the same person is the proprietor or the owner, so there will be certain transactions which act as in between capital accounts. So when you report the balance on 31st December and 31st March, there is a little bit of gap. That causes a lot of confusion, and even to revenue, they feel like, okay, there is a scope, they might have eliminated some income or something like that. So some clarity over that also would be appreciated.
I had one suggestion regarding conversion rates, TD buying rates. It's very difficult to get a TD buying rate because the individual whoever employee comes to us, he comes in the month of July or June for the filing of returns and all. So to go to bank and get a TD buying rate of different dates in a year, like say he would have got his shares in a different date. Can there be a portal which can be provided by income tax department or somewhere where TD buying rates can be accumulated and be put in on day-wise basis? So it's very difficult to get a conversion rate on different dates in the year.
It is difficult, but it is available.
No, online it's not publicly available. I will have to, it's the RBI reference rate is available. What is prescribed in income tax note is SBI bank rate. That is not available on the online portal. So whatever is available is RBI reference rate, not the SBI bank rate. It is prescribed under income tax rule 115.
Adesh, you want to add something?
SBI rates are also available online.
Adesh.
I wanted to ask for the custodial account. So you asked us to enter peak value in the A2 column. So what peak value should we enter?
Custodial account is showing how to enter the peak value.
So peak value is the investment you have to enter.
Peak value of the investment. If it is a form of an investment, custodially you mean to say only bank account.
Yeah, the custodian we usually enter these foreign
Demat
accounts.
Demat accounts.
Equity investments in demat.
He is telling the demat accounts, no? So there are 10 shares there. How to take the market value of all the shares? Something like that. Demat account total investment or you have to see each share individually or daily?
I see, as we enter the peak value of the total cost. Each share we have to go to the market and get the peak value rate. So all the whole July we do this.
Suggestions noted down.
I guess the peak value should be the investment of the cost in the year we enter. That should be there, not the market value. Yes.
Any other suggestions, sir?
One question.
Sir, you know.
Question. I wanted to know the rationale behind asking the amounts disclosures in Indian currency. It is just a disclosure and it is not being taxed. Correct? So why do you need the amounts in Indian currency?
Any asset is to be taxed under Indian laws. So, if we have to determine any liability, that will be determined as per Indian laws. Therefore, the amount should be disclosed in Indian currency.
So, Schedule FA is only for disclosure. I don't think so it is getting taxed in India.
Of course, that has some meaning. If something is disclosed and rationale behind that, investment will also be determined in coming years. Disclosure has some meaning. Government has included some meaning. If it has no meaning, then there was no need of any disclosure.
No, I'm not telling no need of disclosure. Why convert it into Indian currency? If we have foreign currency also, for example, I invested 10 years back at $500. Now I am selling at $1,000. The gain is $500. Then you convert. Income you get, then you convert.
There should be some consistency. Otherwise, so many currencies, so many valuations.
Basically, he's telling you put in the currency column. That's the suggestion. You said if you put the currency column,
because after some time, I can say I had $10. Conversion rate is 67, 77, 82, 92. I can take any value. So it will not match your document also.
Basic currency actually
yeah.
One last.
Yeah, please.
I think there was an interesting question which came up for one of the client in which there was a loss into the share sale, let's say for the year, foreign share sale. The point was that in the FA schedule, you have this column which says that income during the year. The point is that what should we do in terms of loss? Because the loss, we cannot put the minus the figure there. Because quite a few times now, because when the US market were down, the shares were in loss. They sold the shares in loss. The point was that whether what should we do now? So we just didn't know what to do there. So what is your suggestion, sir?
Capital gain schedule you have declared.
Yes.
Capital gain schedule.
Capital gain is but the FA we just kept it zero. So it doesn't exceed.
is not matching the computation.
Yes.
And that's where the problem is, that because then we make final notice that your FA schedule has 0,
Yes.
while you are showing a loss in the capital gain or capital loss. Sir.
Yeah.
Negative. Yeah, negative we can't. Yeah. So for us, reconciliation is still we can manage, but the point is that because of that anomaly, do we expect any notice in the future? Because these things do happen now, because a lot of people are upside down buying the shares outside India. And for the financial challenges, sometimes they sell the shares in loss.
Whether you will invoke 41, 42, 43.
You know, you're reporting your foreign asset, then that you're complying with the FA schedule.
Okay.
So there is no penalty that you're reporting that foreign asset. The only thing is that your income part. So if you're like declaring it in capital gain loss, you take care of it.
Yeah, so basically I understand that because we are declaring everything in the asset, we should be okay from the prosecution perspective. But then the income part, we are declaring the capital gain. So that's okay. I think that's a good answer for us as of now. Yeah, thank you.
You want that?
Thanks a lot for such a serious and precise discussions. And really I am honored that after seeing your response, I once again convey my sincere thanks, and we will work as a team for awareness program. Thank you very much.
Yeah, it's wonderful having all of you here from the Income Tax Department, and it's been quite a learning session for all of us. Before we conclude, I request all the members to stay back for 5 minutes. We'll close it rapid immediately. So we have a felicitation for the Chief Guest and the Guest of Honor. I request Dr. Narendra Kumar sir to accept our the felicitation. I request all the MC members to come up to the dais.
Thank you.
Now request Kalyan sir, please. I request our Vice Chairman Manjunath to hand over a memento to Chetan sir. Members, whatever suggestions you all had, please share it with us. You could email or leave it at the registration counter also. So we'll compile and then reach it to the office, DGAT's office. I request Shamla Madam to accept our token of appreciation and gratitude. I request Rejo to hand over memento to Mrs. Rehana. There is a memento to be handed over to our moderator Naveen Kariwal, so I request BC to hand over the memento to Naveen sir. On behalf of Bengaluru branch, we thank the Income Tax Department, DGIT, investigation, Narendra Kumar sir, Palunigan sir, Mr. Chetan and Mr. Shamla and Mrs. Rehana for taking your time out, valuable time out and coming here. Thank you so much. And all to the members, thank you for your participation and the response and also the the questions, kind of questions you came up. So please leave your suggestions at the registration counter or feel free to email it to us so that we can compile and share. Thank you all and see you next in the next study circle meeting. Thank you. Good night.